Hey everybody, Gary with Basecamp Trading. Let's take a look at a nice short setup we had in gold this morning during the London session. Came in first thing in the morning. We were on this bar right here. The previous bar had formed a hammer, triggered to the upside. We had this consolidation bar, zero line, slow line, zero touch, looking for gold to possibly break higher. That's not what happened. We ended up consolidating sideways, actually pushed down a little bit, went into more consolidation. So we drew in this trend line right here, could see that we were consolidating inside a pennant. The more we consolidate, the tighter the squeeze gets, the better the chance we're thinking for a decent run when it breaks out one side or the other. So we're just waiting for a breakout either through the bottom or through the top. Well, this bar right here actually triggers to the downside, and we get three quick targets, $300 per contract really quick, and then it shot right back up, and we're thinking, okay, well, there's a 30-minute run on stops, so we're watching to see what happens with this bar. If it closes up here, closes as a hammer, we'd have a long bottoming tail closing in a strong bullish hammer, and then we'd be looking for it to possibly trigger to the upside and gold take off the other way. Well, that's not what ended up happening. Instead, we consolidated again, set up this bear flag. Now we're just looking for a break to the downside again on the bear flag. This bear flag triggers out of the pennant to the downside, and we are definitely getting short. While that's happening, the 240-minute chart is also triggering a bear flag. When the 240-minute chart and the 30-minute chart are in confluence, that's when we look for runners. We know that the possibilities are high that we can get anywhere between 50 to 100 ticks when we're trading in confluence with the 240-minute chart and the 30-minute chart. Our Unirenko chart is our primary trading chart, and when that first flag is triggering, that's happening right here in this area. We have our down, up, down pattern out of the cloud. All of our moving averages are in alignment, and we are getting short. We take this down into this area right here. We hit significantly undervalued on the 30-minute chart, and we also hit a target zone on the new MQ gravity lines chart. And that was right here in this area right here. That trade was good for 55 ticks or $550 per contract. Of course, we were taking targets along the way. We take 10 ticks on our first target, 20 on the second, 30 on the third, 40 on the fourth, and then we let our runner run. We ended up closing our runner out for 52 ticks. So we had our initial targets plus $520 per contract on our runner. We got the pullback, and now we have spilled into the US session. But again, we know we've triggered a bear flag on the 240-minute chart, a bear flag on the 30-minute chart. We get our pullback to the 50, make our wick off the 50 with a slow line zero touch off of MQ momentum, and we're looking for gold to go lower. And lower it went. We came all the way down here, and we're actually able to close our runner at 92 ticks or $920 per contract. So that's kind of what we call a no-brainer setup. We trigger a 240-minute bear flag, a 30-minute bear flag. We're in confluence. We know that the probabilities are higher that we're going to get a nice run with a setup like that. And that's exactly what we got in the London session today.